Okay, we'll look at your your June 2019 question. How I wish you have December question. I'll give you all. I'll give you. 3 days after exam, I give you. Okay, you look from your own Q&A. Last set, what page is that? 187. Well, never bring Alah, like that, how to study? You. Yeah, right, focus. Okay, now, this question, it's mainly dealing with incentive. And the incentive, that 187, okay? The incentive that is mentioned in the questions includes allowance for increased export, so which is the area that we have not covered. I thought I can cover this, that's why I push behind our tutorial class, but I still can't cover, so it's okay. I'll give an idea about what is that as we go through, okay? Now, let's start with the requirement. The story is actually very short, okay? Now, this is actually the requirement, and as I've told you, marks will actually be given at the back, which echo the requirement. Now, you are asked to draft a report, so your professional marks, you must give a report to PBSB addressing the following issue. Okay, the first issue, PBSB's eligibility for allowance for increased export. Now, they are asking you to talk about their eligibility for allowance for increased export. Now, this is an incentive, which I normally call in the class called export allowance. Okay. Number one, on the basis that PBSB exports the air purifiers directly, explain how PBSB fulfills the eligibility requisite for this incentive in year of assessment 2020. Now, so they're asking you how that it fulfills eligibility. That means they are not asking for mechanism. They are asking for condition. So if you recall the class we had the last week, I told you normally for incentive, they either ask you to explain mechanism or condition or both. Okay? Now in this case, they're asking for condition. Okay. And by the way, your manager has checked the law and found out that exports with value added of at least 30% but not exceeding 50%, the allowance is 10% of the increased export. So the examiner actually gave the rate to you, the rate for the increased exports, which I've told you that it varies. Okay, now so in that case, she's quite nice that she tell you the rate is 10%. Okay, and then you're supposed to compute the tax saving from the allowance claimable. So what is the amount that you can save based on the amount that you're going to claim? Well, I think that's straightforward, right? If your tax rate is 24%, if you claim 100, you save 24 ringgit. So at the end of the day, they are asking you, so how much is the allowance that you can claim? Then you can get the saving. Okay? Now, there are 4 marks given here, 3 marks given here. Now, I'm just referring to the last part, the requirement to get the marks. Okay, moved on. NSB eligibility for the MITC incentive. Now, MITC incentive. Okay, MITC is also a form of allowance for increased export, but they fall in different category. So the first category that we see is for manufacturer. This is for manufacturer. This is for trading company. So the obvious logic is if you are a trading company, then what you do is you only buy and sell. Okay? Now, and assuming that NSB were to export the air purifier, how NSB will qualify for this incentive, and therefore it will be eligible for 2020 incentive under MITC. So again, they are asking for condition. How do you qualify? Okay. And ask for tax saving again for 2020, and again from the requirements, we notice that the marks given are 5 marks as well as 3 marks. Okay, and then for the diversification project, they ask you how PBSB is eligible for RA. Now, how PBSB is eligible for RA. So you must notice that the question's been referring to different companies, right? This is PBSB, this is PBSB, and this is NSB. If you cannot differentiate the company, you become very kelam kabut. You got to make sure that you're very clear about which company you're dealing with. Okay, so explain how PBSB is eligible for RA. Again, they are asking for condition. And now they ask for tax saving. And this part of the requirement will come to 5 marks and 2 marks. Okay, then finally D is the tax planning. You're supposed to get advice whether PBSB or NSB should do the export. So PBSB or NSB should do the export. And with regard to the diversification project, please advise what is the best course of action. In the view of the mutual exclusion of AIE and RA. You know, all the while when we learn incentive, we understand that there's this mutual exclusivity clause. That means the law usually tells you that if you go for this incentive, you cannot go for the other. Actually, RA also the same. If you go for RA, then you're not supposed to take Pioneer. If you want to take Pioneer, then the RA must be disabled. So it's the kind of concept. Now, likewise, if you want to go for RA, then you cannot go for allowance for increased export because the government will not give you all the different incentives in the same company. So you go for only one. Now, that's why they hinted to the candidate that bear in mind that these two incentives are mutually exclusive. So actually, examiner don't have to do that. She does not need to do that, but she's doing that because she's trying to tell you that, you know, I'm guiding you so that you don't make so much mistake. So as long as you read carefully, you get some hints of what's going on in the question, okay? Okay, then the part E, it's a questions on deduction. Remember, I've told you, like, you know, there's always a part about taxability of income or deductibility of expense. And this is a questions on deductibility of the feasibility study cost. Consider whether the cost of the feasibility study would be revenue or capital. So you're supposed to tell them, do you think it's revenue or capital? Now, they didn't say that argue from the point of view like why it is revenue and why it is capital. If they ask like that, then you must explain both. That I feel is revenue because, and I feel is capital because. Now, in this case, they are asking all. So your answer can be, you make a stand. You can, right from the beginning, you can surely say, I think it's revenue because, then your conclusion. Now, but if you say, can I go in and play safe like, it looks like revenue because of what? It looks like capital because, I think no problem. You will be given credit, all right? Now, at the end of the day, you still have to make a conclusion. And for this, you will be given 3 marks only. So it's not going to be a major issue, right? The tax planning is 3 marks also, okay? Now, and finally, it's the part to do with dividend. Remember, we've been talking about this so many times, right? Okay. Assuming NSB claims the MITC incentive in 2020 and they distribute exempt dividend from the exempt account. I've told you about this TI account, right? Every time when you have incentive, you need to have this tax exempt income account credit, which comes from the tax exemption. Now, the only difference is pioneer status, because pioneer status is the one that before you credit, you must adjust with losses. Other than that, all other incentive, the exemption equals to the credit. Now, in that case, if you got 5,000 exemption, that means you get 5,000 credit. See, I've told you actually, this sort of thing is already not significant already. But you see, examiner is still asking, you know, she's still testing you and ask you like, okay, talk about this exempt dividend and single tier dividend. State how much each type of dividend that they can distribute. Now, I think the answer is quite simple, right? Okay, how much exempt dividend can you distribute? What's your constraint? What restricts you? Your capability of distributing dividend is based on what? Profit, yes, profit. But what about if the dividend is exempt status? It's also depending on what? TI account, credit, right? So if your TI account has only 10,000 credit, that means you can only give 10,000 tax exempt dividend. So I think the answer is quite clear, right? So how much that can you distribute depends on two things. How much is my exempt income credit and how much is my retained earning? Now, and if you exhaust your tax exempt income account credit, then no more tax exempt income dividend. Then you must pay dividend as what? Single tier, you don't have a choice, right? So I think that's quite clear, right? Now, and then how each type of dividend is treated in the hands of the shareholder. Exempt dividend is exempt. Single tier dividend also exempt. Alright? It sounds stupid, right? Like, yeah, it's exempt, it's exempt. Now, the only difference is if it's a single tier dividend, there's an additional issue. What's the additional issue? You know, we take a long journey to talk about that thing.
Disregarded all the deduction.
Yeah, so you have to talk about the part that the deductions in relation to single tier dividend will be disregarded in arriving at your CI. Okay? And actually F is 3 marks only, ma. You've got 3 marks already. Okay? Okay, so 4 marks professional marks. You're guaranteed 2 marks. How do you get the 2 marks? 1 mark is when you have what? Format. 1 mark is you have your appendix. Okay? So I got 5 marks in my hand already. I'm 10% of passing. So close. Okay? Before we read question, we are 10% of passing. Now the other 2 marks, I told you, the examiner also don't know how to give you all. Okay? So you just make sure that 2 marks is given. Now I think the other 2 marks, you never get 4 marks out of 4. The other 1 mark perhaps is when your answer is really perfect. Okay? Now let's read the story. Okay, please assume today is 4th of June 2019, which is the actual day of the exam. So they want you to have that real-time feeling like you're at work. Because when you go to work, you're real-time. Your boss give you an assignment is on today's basis. Your boss will not give you an assignment that talk to you about what happened 3 months ago and ask you to think back 3 months ago, what will you do? That's why you must have that feeling, real-time. Okay, you are the tax associate of tax firm, and one of your client is called Pandai Buat Sdn Bhd. It's a Malaysian resident company, and they manufactures air purifier. So they are factory. They manufacture. Okay, last week your tax manager held a meeting with PBSB Chief Financial Officer, Mr. Bok Chek Wai, and took the following notes. So these are the notes from meeting with Mr. Bok. Okay, PBSB has ordinary shares of 4.3 million and 75% is held by Malaysian and the remaining 25% is held by a foreign company. Okay, so that's their shareholding, and that's their share cap. Now, it started producing air purifiers in January 2017. Is the year important? Which part of the incentive that usually we talk about the year one? That you must be in operation for X number of period before you can qualify for the incentive. RA, right? RA or RAR. Okay, now RA actually requires you to talk about the period because you must be in operation for minimum how long? 2 years? No, 3. Actually, it's not 3 years, it's 36 months. See, the logic is very simple because the RA is incentive for what? What's the meaning of QP again? It's when you do what? Qualifying project is when you do what? There are 4. Yeah, expansion, diversification. You read the question one, right? But actually good lah, that means you're smart. Modernization, automation. Now you see, why would the law needs you to be in operation for 36 months? If the law never put 36 months, let's say the law put 12 months. Imagine you will cheat. You start your factory very small, purposely one. Then after 12 months, you say, I want to expand and make it so big. And then you start claiming incentive. You're cheating at you. But they put 36 months is because if you really want to cheat, chances is, you won't sacrifice 36 months, right? Then you're not going to do business, man. So that's why in that case, they say, okay, 36 months is quite a good period. All right? Now, carry on. You're in Shah Alam and manufacturing complex for domestic market. Its domestic sales are wholly transacted through its wholly owned subsidiary called Niaga. Okay, Niaga, it's the wholly owned subsidiary. That means PBSB produce and then sell to NSB, and NSB go and sell to Malaysians, the Malaysian market. So they are the trader. Okay, PBSB is the trader. Okay, NSB also export rubber wood. Okay, they export rubber wood. They also use Malaysian bank, insurance company, and Klang is their port facilities for the trading business. In year of assessment 2019, PBSB already started exporting its air purifier. Now, they export. That means they also export. So they are selling to NSB and they themselves export. That's the whole story. Okay, then it goes on and says that the value added element is 40%, which the question say that it qualified 10% rate. Now, both NSB and PBSB has 30th April as your year end. And this is the sales revenue for 30th April 2019 and the forecast for the next year. Now, this question is based on you're in June. So think that time. That's why 2020 is a future period. Okay, they have given you how much is the export sales that they can get for exporting the purifier. Now, they already exported 2.5 million. And they believe they can export another 3.5. Now, NSB is exporting rubber wood and also selling domestically. Now, question is asking, should this export be by PBSB or NSB? Because they are questioning whether should PBSB just sell to NSB and let NSB do the export rather than you export it yourself. Okay? Okay, Mr. Bok has approached your firm as he wants advice on whether it's more advantageous for PBSB to continue to export air purifiers directly or export the air purifier through NSB, which is like what I've just told you. Now, he would like to know the tax treatment and the related issues of each option and your recommendation as to which is the best way. And for the period from January to March 2019, they conducted feasibility study. They conducted a feasibility study to diversify into making air coolers. Who does that? PBSB. And the cost of the study is 170,000. And now they are asking you, is this amount revenue or capital? And can you claim or not? What do you think? What does PBSB do? What is a PBSB business? What do they make? They make air purifier, right? And now they say they are studying about whether or not they can make air cooler. Alright? So, PBSB already has a business. I don't know whether you remember, we actually did a question something like that before in the past, in our tutorial class, the previous one. Examiner also asked something similar. But that one was different because that one, the business is not even there. The company kosong one. They will do a feasibility study when you don't have any business activity. Then only they say, based on that, they decide whether or not to start. This is different. This is the company is already in operation making air purifier. So the next questions that you're going to argue is, would you think that air cooler and air purifier are of the same business? If they are not same business, why would the company can claim RA, right? Because you call this a diversification. Then only it must come from the same business line. Then only you can diversify. If you call this as a completely different business source, it can't be the same business. So if it's the same business, that means this is a cost involved for the same business source that you're doing. Now then, would you regard this as an expense which is meant for income production? Which I would say, why not? Because you're studying about whether a product is actually sellable or not. It's just the same like you're doing a marketing course and stuff like that. Can you see it now? Now from that angle, I would say that you can claim. This is my view. Alright? Now, of course, the examiner put out an answer that says that no matter what you argue, she'll give mark one. She'll say that if you argue capital also she'll give mark. You argue revenue also she'll give mark. But of course the argument must be the same as hers. If you say capital and you give a different reason, then cannot lah, huh? Okay? Now, following the positive outcome of the study, the company now intends to incur 2.75 million in March 2020. March 2020 is why? 2020, right? Because your year end is April, ma. To make air cooler manufacturing facilities in the Shah Alam factory. And question says that Mr. Bok understand that it will be eligible for RA. Okay? Now, so okay. First, the answer has to be in a report form, right? So you must have a report. Now, this report is written to who? Who asked for it? Mr. Bok. So how terrible if you miss his name out, right? Mr. Bok, the CFO of PBSB, and you are just a tax associate of tax firm. So usually examiner just put the name of the firm lah, okay? Tax firm. Alright, usually we don't have to put a name there. Now give a date. So the report is dated, you can date the same day of that day of the exam, which is 4th of June 2019, no? Okay? Since that was the date. And the subject is, let's say, the tax incentive and other related matters of PBSB group. Okay, can just give a quick intro, short intro that based on the information provided about your future plan, this would be our advice to you, something like that. Okay, just a simple line to start, don't have to take so long. Okay, now then you are supposed to answer the 3 requirements about the incentive. Now the first requirement, now have an intro line. Okay, the first requirement is allowance for increased export. Now, if examiner question already use the word AIE, you can actually continue to use the word AIE, but I choose to write it again because a report is given professional mark. So I don't want my answer to look so unprofessional. So that's why I write it back again. Now, because we have not actually covered this in our class yet, but it's okay, alright? So I just want to show you that what is the main thing. Now, you see, this is what we have in the notes. Now, companies that is in manufacturing sector, that's the main thing. You're in the manufacturing sector, and you export product with value added element. So that's the requirement. You must be manufacturing and exporting product with value added element. Now, and there is this so-called exclusion. These are what we call the prohibited item, that they don't give export incentive if you have this item. Now then they also say that incentive is not given if you enjoy Pioneer, ITA or RA. Alright, now, so that's the basic thing. Okay, then the incentive will depends on your value added, which they say that if you have 30% value added, you get 10%. If you got 50%, you get 15%, which why the question tell you that you get 10%. The question gave you already. Okay, now, so why are you eligible? Okay, if you don't mind, can I just bring you to the answer? Okay. Now, the answer is actually at the back. Okay, the answer actually says that you can qualify for AIE because you're a resident company. Yes, resident is always a requirement. Resident. Okay. Manufacturer. That's very important. You're a manufacturer. So the most important keyword is you must also manufacture. Okay, now, and you must export. You cannot go for this incentive when you don't export the product. Okay, and this incentive is only given when your sales, your export sales increase. I mean, how funny it will be if you say that I want to claim allowance for increased export, and I ask you that year how much do you increase? No, I never increase, I drop. Then how to claim? Increase export must increase ma. So that's why your export sales must be higher than last year. What? Now that's why you have to tell in the answer that your sales has increased. Now did the sales increase based on what they have given us? Remember the question started by telling you that 2019 you only have 2.5 million but you expect 3.5. Now that was the whole paragraph that the examiner tell you about the increase. They say expects registered export sales of 3.5, which is an increase of 1 million. How do you get 1 million? It's 3.5 minus 2.5. Now, because the value added is 40%, the rate will be 10. Now, this one no mark one, because the question say already. So, you want to write down, write never mind one, because when question gave you the info, there will be no mark already. Okay? Now, so this is the most important thing that you have to say, that there is an increased export. There is an increased export. So three things I must highlight lah. They manufacture, they have export sales, and there must be an increased export. What the examiner did is examiner has proven it. This is a proof that the increase is 1 million. Now, and finally, examiner say what? That if you are granted incentive under PIA, PIA actually meant Pioneer and ITA or RA. Okay, now so that will be condition. So when you study the note, the notes are like that. Okay, the notes are like that. Okay, now but when you go for the exam, you have to recall the notes to write back. Now one additional point that you can add here, which examiners still have to give marks to you if you write the answer, is you can say, because now I'm just putting as an extra point that PBSB is not exporting product that is prohibited for AIE incentive. Okay, that air purifiers are not in the list. Enough already. You just have to say that you are not being prohibited. Okay, now, and then when it comes to part A number 2, right, you will say that the AIE would derive a tax saving of how much? Okay, now the detailed computation is in the appendix section. Remember, I always tell you this is what we'll do. We just write down and then refer to the appendix. Okay, now this is the first part. Okay, I would like to move on to the second part where they talk about MITC. Okay, if I can show you the notes again. Now actually MITC is harder because MITC has more requirement. Alright, Now, this is what we see here in the notes. Okay, the companies must be approved as an international trading company, that you must get a certification from MATRE to confirm all this. The company must be incorporated in Malaysia, which you can see from the name. It must be 60% Malaysian owned, which the question gave you the clue, right? You know, when you see like that, then of course you find it's very easy to pick up, because you're actually looking at the notes now. Now, company has achieved an annual sales turnover of 10 million. Go on, huh? How much is their turnover in 2019? 10.5 million, all right? And 2020 will be 11.5. That's before you include the air purifier. So, do you have 10 million? Yes, okay? Now, and it goes on and says that not more than 20% of the turnover is from trading commodity. Commodity is those raw things. Do you have commodity here? Like palm oil, crude oil, gold, tin. Got or not? Got. The wood, lo? The wood is a commodity. You're exporting wood. Now, and it goes on and says that if you have commodity, right, no more than 20%. How do you know your commodity is more than 20% or not more than 20%? You what? You calculate lah. You just take the amount of the wood sales, divide by the total sales, then you know whether it's there or it's not there. Correct or not? Now, how much is the wood sales? 2 million, 2020 lah. We are talking about 2020 for the incentive. Wood sale is 2 million. Then the rest of the sales is 3.5 plus 9.5. You add up, it's already 15 million already. 2 out of 15. Will you hit 20%? No. So you fulfill or not? You fulfill. And then they say company uses local service for purpose of banking, finance, insurance, and ports. Are they? So you have to write back. That's why I hope this gives you an idea, like when you study incentive, how would the examiner be testing you? They're actually testing you literally what you see, but perhaps a bit of application. All right. Now that's why if I just show you the answers here, NSB fulfill the following condition for 2020. Number 1 is incorporated in Malaysia. Now, then it goes on that you're wholly owned by PBSB, which is already 75% held by Malaysian, and that exceed the minimum requirement of 60. Remember, I've always tell you the law and the facts. If you just say that NSB is 75% owned by Malaysian, full stop, no mark on. Why? Because you're not telling me anything. You're just quoting the question. Now, if you tell me that NSB can apply because you have minimum owned by Malaysian 60%, now that's the law. But how do you prove that? That's why you quote that you are 60% because you're already 75% held. Can you see or not? Now, then it goes on and says that for year 2020, if you were to export the air purifier, then your sales revenue become 15 million, which is from the 2 million the wood, 9.5 million the present domestic sales, and 3.5 million is the export sales. Now again, this is the facts. And what is the law? Minimum 10. Now go on. The total rubber sales of 2 million is 13.3%, which is not more than 20% of the revenue come from trading commodity. Again, this is the law, this is the facts. And then it goes on and says that because NSB uses Malaysian bank, blah, 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 it also fulfill the requirement that you must use local service. Now, the facts, the law. The facts, the law. I hope you get the idea that this is how you write the answer, okay? Now, but remember we say you must get a certification, right? And that comes in the last line. That NSB will succeed if it applies to Matrix for a certification for MITC. Now, all that is bulat, the notes. So I hope this gives an idea what you're expected to do. You say, oh, I prepare for the exam, how would they ask me? Now, at least you get an idea, okay? So if you see, like, if you say, well, I never study this part, you go exam, very difficult, yeah? Because there are very specific things that is very hard for you to guess on. Like all these 10 million, 20%, I don't think if you don't remember, you will be able to do, all right? Other than that, the local port, all that, I think you can still guess up. But the very specific one, probably you will not be able to get it, okay? Now, so this is the second part, that after you talk about the condition, then you must go on and talk about the savings again. Okay. C is the RA for diversification. Alright, the RA for diversification. Okay, why do you think that the company is eligible? Now this is probably easier because RA is quite straightforward. They don't have very complicated requirement like minimum revenue and stuff like that. Okay, what makes you think that the company qualify for RA? Just now we say 36 months, right? Now I just highlight what we have said lah. You must be in operation for at least 36 months. Okay, can you prove it for me? How do you prove it? Since when they started? They have commenced operation in January 2017. So when will 36 months be? December 19, right? Will be 36 months. And when will they do the diversification? They plan to incur in March 2020. Now, the law and the facts prove it. You have 36 months, okay? Okay, what else? What other things that you will have to bring in? RA, you probably will remember what? Who gets RA? What kind of business you apply RA? If I do hotel, can I apply RA? Can college apply RA? Cannot. Then who apply RA? Factory. Manufacturing. Yes. Again, you must come back to the phrase manufacturing. Now, you must be a manufacturing business. And do you remember the word manufacturing has been defined? Remember or not? For RA purpose, manufacturing has been defined. They tell you what is manufactured and what is not. And they give you a list of activities that they are not manufactured. Well, you look very excited. What is it?
I don't remember. I remember from one thing become another thing.
Wow, from one thing. Now, so what is not manufactured? Example, making of ice is not manufactured. Recycling of waste is not manufactured unless you use it to do a raw material for your own product. Correct or not? So they actually give you a list, like processing of photos are not manufactured. So you are not, because you are making air purifier. So you have to say that you are a manufacturing business and making air purifiers are not being excluded. You're not being excluded. Okay, what else that you need to qualify RA? Your resident company. I always highlight that, you know, sometimes they need the incentive to be resident. Sometimes, I mean, actually all incentive has to be resident. But just as some incentive needs to be incorporated in Malaysia, some don't need. But it doesn't matter one. You go exam, you bantai. You also right. Because wrong, no mark only ma. Correct not? Wrong, no mark. Correct, got mark. So what is there for you to lose? You just go there and write lah. You are a resident company incorporated in Malaysia. So if they don't have incorporated in Malaysia, that one no mark, but resident you still correct. You probably get a half mark there. Just bantai Okay, what else that you need? What's the most important thing to get RA? Yeah, you must give me the full sentence. Before you can even come to QP. Incur, yes, you must incur QCE. Okay, for qualifying project. Actually, the QCE is incurred for what? Incur on what? On factory plant machinery. That you must use it in Malaysia. And what is QP? We say just now, right? It can be expansion, automation, modernization, diversification, and the question already say that they are going into diversification. Now, and do you see this or not? Can you prove it? Did the question mention anything? The question say, right, they give you the amount, right? How much they're going to spend? 2.75. So the facts are there. Okay? Now, so again, you are supposed to provide the part on tax saving, which is the second part. Sorry, I changed my numbering. Okay, this is the second part that you have to refer to the appendix again. Okay. And honestly, we cannot give advice until we know the figure. So can we leave space? Just leave space so that you can come back and fill in the blank. Now let's go on to the appendix section. Now appendix has to be in a separate section. Cannot be part of the answer. Don't fill in between. You cannot do that. It must be a section all at the back. Okay? Appendix. Okay. AIE. So this is for part A. Okay? Now, you need the export sales for 2019 and the export sales for 2020 now. 2020 and 2019. Now the export sales for 2020, they have given you to be 3.5 million, correct or not? So that's the export sales that they have given you. Then the export sales of the preceding year is 2.5. Now this is the increased in the export sales, which is 1 million. And what's the rate? 10%. Now, so the increased export allowance is 100,000. Now, you're supposed to take this allowance to offset to your statutory income for exemption, but it doesn't matter because there's no time limit. So what we know is you definitely will get a tax saving because this is your tax rate. So your tax saving must be 24,000. Okay, then if you go for MITC, now you're doing actually the same kind of incentive, but now you have a different amount and different rate only, right? So what is your export sales for 2020? Now, you see, you are going to export 3.5 plus 2 million. Three and a half is the air purifier. The 2 million is already an export sales from your rubber wood. Okay? Okay. And then for 2019, your export sales was 1 million. So the increase in export sales is 4.5. Now MITC is given a better rate, 20%. Okay? Now when we do class tonight, you will see that. Alright? So you just take the rate first. Okay, so the allowance for increased exports is 900. It's still an allowance for increased export, and you still get a 24% tax rate. So your tax saving will be 24% of 900,000. Now that gives you 216. It's obviously very, very clear that if NSB is to export for you, you get more saving than you export yourself. These figures are already quite obvious. Okay? Now, then you're supposed to do the saving for RA for Part C. So you notice they are not expecting you to do a full tax com also, you know. They just need you to understand that this is the effect. The full tax com is not always required, okay? Okay. How much is your qualifying capital expenditure? 2.75 million. And then you always get how many percent? RA, how many percent of the qualifying capital expenditure? You must claim, then only you absorb. Absorb is exemption. Claiming is the first part that you must do. 60, yes, you get 60% of what you incur. So this is your RA that you must have claimed. So 2.65, if you take 60%, it will be 1.65. Now, the exemption is only given when you take this amount to offset the SI, but it's only a timing issue only. You definitely get 1.65. It's the same as the export allowance. You sure get the 900,000. Is another timing issue only. So you sure get. So that's why in this case, the 1.65 you sure get. Alright? Now, so you take 24% of that. That will be a tax saving. So 396.
Will it be enough for you to
Of course. No marks do for fun. I thought we labeled the mark already. Right? Total 9 marks. 8 marks. 3 mark, 3 mark, 2 mark. 8 marks. The writing got how many marks? 14. Remember I told you, computation now very underweight one. Low weight. You do a lot of computation, you get very little marks. You do writing, gets more mark. Alright? The writing is the one that's actually more valuable. So you see the amount of work you do here and the amount of writing we do is actually writing is much easier. Okay? Okay. Let's go back to part D now. Now I think the figures are very clear already. Tax planning. You're supposed to advise them who should do the export. PBSB or NSB. Come, give me the answer. I think you can tell me the answer right from the figures that we see. Who should do the export? If PBSB do the export, the result is in which part? Part A. That means you only get saving of 24. If you let NSB do the export, you will get result as part B and C, exactly. It's not only B, B and C. So you have to say, if PBSB do the export, then you got no RA already. Then you're going to lose so much. But if you let MITC does the export, you get a much higher exemption with more saving. Plus, you then can continue let PBSB claim the RA. Then you will have both the saving, which is 500 over 1,000. Correct or not? Put it in words. Is it difficult to put it in words? No, right? Okay, so you just have to put it in words. In part D. That now, if PBSB is to export the air purifiers, it will only enjoy a tax saving of how much? 24,000 and unable to claim RA. Now, by allowing NSB to export and claim AIE as MITC, then PBSB can still be eligible for RA. Now in that case, both NSB and PBSB will enjoy tax saving of X and X, which again is from the appendix. Just write something like that. Okay, my answer, have I made the conclusion? Not yet. I have not given the conclusion. I have only analyzed. If you go for this one and the other one, what's the effect? So conclusion has not been given, you know. Please don't say that, then they should know what they read, they should know. No, they shouldn't. You must tell. Okay? Now, therefore, PBSB shall claim RA on the diversification and allow NSB to export its products. Now that's a conclusion. Okay. Now for the deductibility, now I would say the activity of manufacturing air coolers is part of the existing business of manufacturing air purifiers. Now I use the word activity. I didn't use the business. Business is business. If you say the business is part of the business, I don't know what you're talking about. The activity is part of the same business. How do I justify that? Now I would use the word RA. Okay. Now this is evident from the fact that the diversification is part of the QP for the same business. Thus is eligible for RA. Okay. Now, so I would start with this ground. Then I would say, because of that, so manufacturing air cooler is not a new business, rather is part of the existing business, and thus the feasibility study is not a pre-commencement activity. Okay, it's not a pre-activity that we do it before the business is there. The business is already there. Okay, now it is therefore an expense incurred in the ordinary running of business. That means it's something common that we'll just do it when we run business. That's what it means by ordinary running of business. Thus is revenue in nature. Now you must answer two questions. You must say revenue or capital. So if nothing in the answer mention revenue in nature, then you're not answering questions. So you must say yes, it's revenue in nature. Now then you have to say whether it's deductible or not. Okay? Now so since it's just an ordinary expense, then the deduction is under the normal rule. That deduction is given. So deduction is given. Now if you usually talk about deduction, I would suggest that you have to highlight that where the deduction is given, okay, against the business gross income. Now there's only one business, so I don't need to say is which business, in arriving at its adjusted income, okay, as it is an expense incurred for production of the gross business income, or its expense wholly exclusively incurred for production of the gross business income. Expense wholly and exclusively incurred. Now that's it. Just talk about the general deduction principle will do. Now this is my argument of why I think that is claimable. Okay? Now, the question is asking in part F, and who is the one that's distributing the dividend? Is NSB. Okay? Read carefully. NSB give dividend. Okay, if NSB give dividend, NSB give to who? Yeah, NSB must give to PBSB. If NSB give to PBSB, what will happen if it's a tax-exempt dividend? Remember, the tax-exempt dividend got what? Got 2 tier ma. So when you give, PBSB will credit that as a 1 tier account. Then PBSB can give again. Okay? Now, so 2 things. No space. Okay, number 1. Tax-exempt dividend requires tax-exempt income account credit. Okay, now based on the info, how much credit will you get? How much NSB will get? Just now we calculated you. How much is the tax exemption? What was the amount that we calculated? The increased export is 4.5, then you get 20, so 900,000. Okay? Now, you've got 900,000 exemption. That means you will have 900,000 tax-exempt income credit. Now, so you can pay maximum 900,000 tax-exempt dividend to PBSB. Now, this allows PBSB to credit the same amount to tax-exempt income account 1 tier and pay one small tax-exempt dividend to its shareholder. Actually, examiner want to test you whether you know 2 tier or not. That's why the question is testing on that only. Okay? That you know that you can credit and pay again tax-exempt dividend. Now, then all other dividend will be single tier. Okay, all other dividend will be single tier. Now, and then remember you say that to PBSB, any expenses, okay, actually the word is not expense, the word is deduction. Any deduction in relation to single tier dividend are disregarded in arriving at chargeable income. Now, and it doesn't matter what dividend, okay, to the shareholder, the dividend will always be exempt. So it doesn't matter. So you can just write as one last line. Sorry, I got no space. Okay, You just write as one last line and say that both dividend will be tax exempt in the hand of shareholder, and then you have to remind that NSB can only pay dividend if you have profit. Must have retained earnings. Okay, so I just put here retained earnings requirement. Just have that in your answer, that'll be good enough. Okay, 35 marks. It's one of the easier questions. Okay. The only tough part, honestly, is the MITC part. Because if you don't remember the condition, then you will actually risk the 5 marks. But you will not fail the question, because if you know the incentive, you still can work out the incentive. You only don't know the condition, then you can still go on with the rest. So this is not a very tough question. The 35 marks are quite reasonable. Okay, I'm going to go on to question 3. Okay, question 3. Let's look at part A. This is a 20 marks question. Then you can judge whether you can pass or cannot pass the question. Okay, the 8 marks requirement with part A. It says that explain how the rental income received by LGE Sdn Bhd in respect of letting of the 2 commercial building in year of assessment 2018 will be taxed, and also the tax treatment of the rental expenses and the building expenditure. Now, what do you mean by the building expenditure? What kind of building expenditure that you're referring? I mean, what crossed your mind? If I say building expenditure, see, the question is about rental already. Then they say talk about how do you treat the rental expenses. They mention expenses. Then also building expenditure. So actually the building expenditure is referring to what? IBA. Exactly, it's IBA. So the 3 things that they're asking, what? The income, the expense, the IBA. Alright? Now, and 8 marks. Okay. This is how the questions read. LGE acquired 2 commercial buildings, a warehouse and a retail outlet in Selangor for a total of 15 million in 2017. The first building, a warehouse, was let out throughout the financial year end 31st December 2018 for a monthly rent of 12,000. The tenant uses the warehouse in the business of providing storage space to the public. Now, LG is required to provide comprehensive repair, maintenance, cleaning, and security of the property during the tenancy period. Okay, this is a warehouse. The warehouse is to provide storage space to public. And these are the expenses: repair, maintenance, cleaning, security. Then they go on with the second building. Now my question is, do you need to do any computation in the question? Don't need, because you can't. I mean, how are you going to compute? You don't have details, right? So when students actually go in and try to compute and get some numbers out, the question, the student is actually killing themselves, you're doing something impossible. And you read the requirement. The requirement never asks for computation. Requirement asks for 3 things, and it explain how do you treat rental income, expenses, and the building expenditure. Okay, is the warehouse industrial building? Yes, very sure. Storage space to public is an industrial building. Okay. Now, and can I know the rental is what source of income? Business. Which part of the question tells you is business? Okay, they mentioned the comprehensive. And they give you what are the things they offer. Repair, maintenance, cleaning, security. So remember, we say comprehensive, maintenance, and support. So there's maintenance and support. Now this is 4A, right? Okay, carry on. The second building is a retail outlet. First let on 1st July 2018. And you're going to use that as a restaurant at a monthly rental of $10,000 for a period of 3 years. Under the tenancy agreement, CKT is required to pay no rent for the first 2 months to allow them to undertake renovation work. Now that means the tenant will do some renovation, so we won't charge rental. So your source start 1st July or 2 months later. What is the requirement or the rule to determine commencement date? When the tenant move in. So that means the date is when? 1st July. This is a 4D rental. Okay, I mean later we read, see whether they mention anything about maintenance support. Now, so on 1st September, there will be 1 month utility deposit together with 1 year advance rental. You don't tax deposit, am I right? And advance rental, do you tax? Yes. Now, LGE will incur legal fee for the advice taken on the tenancy agreement. Can you claim this? The legal fee? Why? What makes it capital? Capital is right, but what makes it capital? Initial. This is initial. Okay, so that's why you cannot claim. Okay, LG is required to install movable partition at the back portion of the building and to configure 8 private dining room and to provide security guard throughout the tenancy period from 1st July, but does not provide repair, maintenance, and cleaning. That means even though you provide security guard, is the support service comprehensive? No one. Remember, we say you must be comprehensive maintenance and support. That's why in this case, this is definitely 4D. Now, even if you provide movable partition, what can you do? Nothing, because the rental is 4D. You cannot claim CA. If it's a movable partition, it can be a plant because it's not part of the building. Then you can actually claim CA. But this is not business. There's no CA for you to claim. Okay? Now, I think that gives us some quick idea about what to do here. Question 3, part A. Now, first, warehouse. Okay, 3 things you must deal with. First is the rental income. Now, it is assessed as business source because comprehensive maintenance and support service are provided. Now I must give you a reason. So because comprehensive maintenance and support service are provided, okay, so the rental income is 144,000 for Y18 because the question gave me the rental. Alright, so I'll be able to put, I put. Okay, that's rental income. Now then you're supposed to talk about the rental expense. Okay? Now then you have to say the expenses for comprehensive maintenance support are deductible against the business rental gross income, as they are wholly exclusively incurred to produce them. Now, in fact, if expenses exceeded gross income, what will happen? The excess is current year business loss that can be used to offset the aggregate income of LG. Now, then the building expenditure. Now, as building is now the keyword use. That's a keyword. As a warehouse to rent storage space to public, it is an industrial building. So LGE is entitled to IBA as it is the owner of the building and you have incurred the qualifying building expenditure. So for Y 2020, what do you get? You get an annual allowance which is 3% of the qualifying building expenditure. Now I don't have the figure. Now that's the first part to do with the warehouse. Now I think there are more things you have to say when it comes to the restaurant. Okay, first, how would you deal with the rental income? Now, you must highlight that providing security guard alone would not constitute comprehensive maintenance and support. So, the rental is a 4D source. Now that's the first thing. You must identify the fact that this is not comprehensive maintenance support. because you're just giving security guard alone. Not enough. And this part is the part that they mention two additional issues. They mention deposit and advance rental. So you have to mention, right? Okay, deposit is not subject to tax. Why? Yeah, because it's subject to refund in the future. So this is not even an income. Now, advance rental is what? Okay, I want to know what would you write. Then I will tell you whether your answer is good enough or not. Advance rental is what?
Income for next YA.
Income for?
Following YA.
Okay, then?
Taxable.
Then it's taxable. Okay, so advance rental is income for YA 2019. Are you trying to tell me that? Because this is 2018. So you're going to say that advance rental is income of 2019 and is taxable. Okay, I write down what you say. Advance rental is income for YA 2019 and is taxable. Okay, let's try to improve this answer. What is not clear about the answer?
Assess in which year?
Okay, assess in which year. So how do you improve it?
So in the current YA when it is received.
Okay, you assess is taxable in YA 2018
when it is received.
when it is received. Now this is better, but still a little bit confused. Is this the income of 2019 or income of 2018? Because you say it's income of 2019, but it's taxable in 2018. So which income is that? Now, this can be rental for year 2019. Okay, the advance rental is the rental for year 2019. Not income of 2019. It's year 2019. But it's taxable in 2018 when it is received. Okay? Now, why? Because of what? Because income is assessed on receipt basis. Now, when it is received is the fact. Tax on receipt basis is the law. So why do you tax it when you receive? Because it's receipt basis. Okay, now so it's not income of 2019. It's not income of Y19. If income of Y19, then it's Y19 already. So it's rental for 2019, but it's taxable in 2018. Alright, now that will be good enough. Okay, now so that's how I hope you slowly see how you should write the answers properly. Okay. Okay, so this is the advance rental. So we've talked about deposit, we've talked about advance rental. So now we can move on to the rental expense. Now, the commencement date is 1st July 18. So expenses prior to that is not deductible because it's pre-commencement. I think that is good enough to start with. Okay, so you commence 1st July. So anything before that is not deductible because it's a pre-commencement expense. Okay. the 10,000 legal fee is not deductible because it is initial expenditure held as capital expenditure. And any other expenses or not? Can, right? Now, so all other revenue expense including the security costs that are wholly exclusively incurred, now I don't have to write the whole line, is now deductible. Okay, because the questions mention you have to give security, so since you have to give security, then you mention about the security service. Now, and then you have to talk about building expenditure. Now, restaurant is not used as industrial building, so you don't have IBA. Now, the cost of the moving partition is a plant, but you will not get CA, as this is what? Why will you not get CA? Because this is what? Yes, because this is not business source. Now, if you say this is not business source, you are right. If you say because this is rental source, you are wrong. You must know how you write properly, okay? Follow? Now, again, if you say this is not business, that's the right thing. Now, if you say this is rental source, that's a wrong answer. Okay? Now, let me show you why it is wrong. If you write your answer as you will not get CA because this is rental source, then I ask you, then employment can or not? If you say because the reason is because this is not rental, so I say okay lah, then I don't want rental lah, employment can or not? Still cannot. See, your answer have leave a lot of gaps for ambiguity. If you say if this is not business, I ask you employment can or not? Still cannot, but be still not business. Can you see or not? So you must write the accurate point to describe what you understand in the law. So don't jump into the wrong word, because sometimes it's very normal, you know that, oh, this is rental, that's why you don't get. Now, the reason you don't get is not because this is rental, because this is not business, okay? Okay, so that's the first part, the 8 marks. Okay, let's just go back to questions again and see the last part here. There's another 12 marks given. Okay, describe the special tax treatment accorded to a REIT compared to a property investment company. carrying out business of letting property from the perspective of. Now, the question made it very clear, right? You're comparing REIT with what? A company that is what? Carrying out business of letting property. So that means this company is doing what? Investment? Really? We're not sure, alright? We are not sure whether you are investment holding or not, but the company definitely will take the source as what? For A, because it's a business of letting. Alright? So we really do not know whether you're investment holding or not. Now, we will try not to go into too complicated, because if you start to say that if you are investment holding, then you got to start talking about if you are listed investment holding, unlisted investment holding, and not investment holding, compare with REIT. And only 5 marks, cannot be. I think from that angle, I understand that cannot go so detailed. Alright, so I think you have to take into that. So maybe you can start off by saying that I will have an assumption that this is not an investment holding company. Okay, I can put an assumption that the property investment company here is just an ordinary company and not an investment holding company. So easier for you to explain the answer. Okay, so they ask you to compare this REIT and a property investment company in terms of deduction of expenses, deduction of donation, and the eligibility to carry forward losses and CA. Now then part 2, they ask you, what is the total income that you need to distribute for 2019 to qualify exemption? How many percent? Minimum 90. Okay, then finally they say that, what is the tax treatment for the different type of unit holder for the distribution made to them by the TPR REIT on the assumption that the TPR qualify for exemption? So remember, when the REIT distribute dividend, what will the REIT do? Withhold, right? The REIT will have to withhold how many percent?
Depends on.
Okay, so what percent? You give me the percent first. How many percent? Cannot remember.
I remember got 3 categories.
Wow. Then how many percent? You still have not answered my question. How many percent? Jasmine? Johnson? Remember or not? 10 and 24. 24% is when you are non-resident company. The rest all 10. There's one category we don't withhold. Resident company. So the resident company will get dividend in full. And what will the resident company do when they receive the dividend? They pay tax. That's why when we do a questions on investment holding, I gave you a questions where the dividend is paid by REIT and we tax it. And when they pay tax, the next question is, if a trust give you dividend and you tax it, what do you get back? Section 110, provided if the trust paid the tax, right? But they say here what? The REIT qualify exemption. So what will you say? No set off law. So you have to say that because the REIT never pay tax, so the dividend does not come with set off. Now I think that's the 5 marks. Very, very straightforward, right? Okay. Now, so let's read the question. Okay, Tony recently commenced employment with TP REIT, which is called TPR, a real estate investment trust, which is listed on Bursa Malaysia. So that's a REIT. REIT needs to be listed, one of the requirements. Okay. Now, TPR has a portfolio of commercial property in Klang, Malaysia and Singapore. Investors in TPR include Malaysian resident and non-resident companies resident and non-resident individual. And for 31st May 2019, they had this following income. They have rental, they have dividend from Singapore. Now, during the year, TPR made a cash donation of 500,000 to approved institution. In the prior year, the deductible expenses exceeded the rental income, which they suggested to you there's a loss. That's why I say the expenses exceeded the rental. Now, Tony understand REIT will exempt from income tax if it distributes enough profits to the unit holder. So, three things that we're going to see here in part B1. Now, I just touch on with the point, okay? Now, if you are a REIT and if you are a property investment company, now I would state that assume it is not an investment holding company, because if you're an investment holding company, then your treatment will be very different already. Okay, number one, how do you treat the deduction of expenses? Now again, how does REIT get deduction of expenses? Now, expenses that they are wholly exclusively incurred, you will use it to deduct against the REIT business rental income. Now, I will not discuss PE. In case you thought of, hey, I want to talk about PE or not. No, because I'm not comparing with unit trust. It will be different if the question say, can you please compare REIT with unit trust? Then you should talk about fraction of the PE, because unit trust get fraction of the PE, whereas REIT will get full deduction under the business rental. Now, so then you might talk, but here I don't need to talk about PE because it's not even relevant. It's direct comparing this with this. Can you see or not? Now, so that's it. Expenses wholly exclusive is given the deduction. And then what about property investment company? Same principle. Expense deduction carry the same principle. You deduct the same way. Okay? Now, can I know donation? How will it be different?
Company is 10%, REIT is 7%.
Okay, give me the full sentence. How are you going to say it?
Donation is deductible against aggregate income.
Okay, aggregate income.
Maximum 10% of aggregate income.
Okay, but up to maximum 10% of aggregate. Okay, that's good enough. All right. And then you realize that for this one, you just have to change the word 10 to 7 because you're not a company. Okay, now that's good enough. All right. Now then the third one is, what about eligibility to carry forward tax losses and CA? Can or not? Can REIT carry forward losses and CA? Cannot, right? Now, so REIT is not allowed to carry forward unabsorbed CA and not allowed to utilize adjusted business loss. So the current year business loss is already disregarded and cannot be carried forward. Okay, what about if you are a property investment company? Can you do that? Can, right? So if you have unabsorbed CA, you can carry forward. And if you have unabsorbed business loss, what do? You can carry forward. But even though you want to tell people you can carry forward, do you think you should also tell them what do you do after you carry forward? It's better, right? Rather than just say can, you just say can. Isn't it better if you say can, and when you carry forward the subsequent year, what do? You deduct against what? Aggregate business SI. And do you have a maximum year to carry forward now? Yes, so state that. Maximum 7 YA. Okay? So you have to say that, then you can use it to offset aggregate business SI in the subsequent YA, and you can only have maximum 7 consecutive YA to carry forward, upon which you disregard it. Now that is the first part. Now then they ask you in the second part to compute the amount that you have to distribute. Can you just look at the number and see how much will that be? Actually, you don't have to do a full tax com also, never mind, because it's not a tax com question. They just ask you to compute the amount that you need to distribute. How much? Berapa? So long, meh? You're like pressing Mahathir got how much money like that? How much?
I don't know correct or not.
Never mind.
4352.4.
4?
4352.4.
How do you calculate? Let me see.
Because
0.9 Why 0.9? I don't know. I see you take 0.9. Now.
90% for exemption.
Okay. I thought you take the donation. Sorry. Okay, so you know that the aggregate income is how much? 5 million. The dividend is not subject to tax, so aggregate is only 5 million. Then you minus out the donation, and how much can you claim? 350, correct or not? So you will get this as 4.65. Betul ah? And then you take 90%. So how much Terry? 4 what? That's what you say?
I don't think so. I got add the dividend.
Oh, you cannot add dividend. Because dividend is exempted already. 4185. The minimum to distribute. And although the question didn't say, Can I know the period that you have to do the distribution is from when to when? First of June 1, 8 until 31st July 1, 9. Because you always can plus 2 months from the year end. Okay? Okay, so the last part is the part that I just explained to you. So you have 3 main type of person. Now, resident company, you pay without withholding tax, and you will have no section 110 set off, as TPR is tax exempt, and this dividend is subject to tax. Now, non-resident company is a withholding tax at 24%, and withholding tax is final tax. That means you're not going to get any more tax, right? So you just have to mention that. Now, and all others include the resident and the non-resident individual, because the question mentioned the people. They will get withholding tax 10%, and again withholding tax is final, so you're not going to get any other tax. So this is the main thing that you must have in the answer. So as long as you mention that, that will be good enough. Okay, so that's it. I'll stop here. This is our question 1 and question 3.
Now, what is the no section 110
Set off.
set off?
SO. As TPR is tax exempt. Okay, good.